Assalamu alaikum. It's Ramadan, and I've been thinking about what I can do to do something big this time around, and I decided I'm gonna look into how to build an Islamic insurance company, and that's Sharia compliant, interest free, etc. First, I wanted to find out if such exists already, and then if not, turns out there isn't. I wanted to find out how can I go about building one. I know it's like a daunting task, but today it's made a lot easier with the help of AI. So I went into my Claude code and started building up my plan and the site that I want to share with you today. So I built this website. I want to walk you guys through it. What I did was that most of the stuff information that you will see here is by Claude. I am not so familiar with Takaful insurance and Sharia compliant insurance that I can claim that, oh, I wrote everything. I did not. I asked Claude for a lot of help and it provided it, but I also don't know if it's 100% accurate. So as we go through it, we'll see what it got right, what it didn't, but it's a good start. So let's tell you a little bit about what it is, and then I want to also spend some time talking about how I got here. So this thing that you're seeing on the website screen right now is the front page. It's very easy to generate front pages using AI today. So all of this was Claude. Interesting thing that it did was that it also identified some stats in terms of the total global Islamic economy being $3.9 trillion, US commercial insurance being 350 billion, which is very large. And we also have a large Muslim population. It's not large in terms of percentages, but it's large in terms of numbers. So 3.5 million plus, we don't know the exact number, but somewhere around there. But what we don't have is an Islamic insurance carrier. So that's the message here. So what's the problem? The problem is that Muslim owned businesses, mosques, and Islamic schools, Halal enterprise, and others, right? They all require insurance, but they have to go the traditional route because there isn't an Islamic insurance, and the traditional insurance companies typically use these things, which are riba, garar, and maisir, which is interesting. I mean, it's like we knew about interest. I think most people, what we didn't know about is garar and maisir, which is excessive uncertainty and gambling. Well, gambling we knew, we just didn't know what it was called. Well, I didn't know what it was called. So the opportunity is kind of there. There's an unmet need in the market, and we don't have a carrier that currently operates. We have some mortgage companies, we have some bank, yeah, mortgage Islamic mortgage companies, but we don't really have an insurance company. There's some smaller spaces where they are operating, but it's not an industry. And the good thing is that the market is fairly concentrated in some key metros. So it's not so widespread. You can actually start small and then go from there. And the numbers are growing. There's a diverse demographic, and and they're increasing their economic influence. So this could be a great time to start to offer them something that they're looking for. So first, we learn about what the three insurance models are. Well, there's the conventional model, which most people are familiar with, which is the risk transfer. You buy a policy, and basically, if something happens, the insurance company takes care of it. If something doesn't happen, then your premiums are basically the profit for the insurance company. And then the ownership of the really works as a shareholders. A lot of these companies have shareholders. You can probably even buy shares to these companies, which is great. But there is a claims misalignment incentive, because if there is a claim, there's obviously an incentive for the carrier not to pay, because the more they don't pay, the more their profit is. You are good if you have a claim, but if you don't have a claim, then the insurance company keeps the money. But if you have a claim, then there's an interest for the insurance company to also keep the claim as low as possible, um, because that's why they keep more of their profit. Now, surplus, what happens when they have the profit, the money? It goes back to the shareholders. It's not really about policyholders. You paid your premium, that part is done. It goes to the shareholders. So if you are a shareholder, you make money, but otherwise, not really. Investments are unrestricted in terms of conventional insurance company. It's not quite unrestricted. There's some guidance. You can't be 100% in stock market. That's why bond market is preferred, and bond market, we know, for Muslims is an issue because it has to do with a lot more interest. And so because of that, they also, that's where the interest issue is. And then the other issue is that it's they can invest in anything. There are a lot of industries that Muslims do not want to be a part of, but conventional insurance don't have any reason not to invest in them, including casinos, alcohol shops, and other companies that are not halal, let's say. So there is another model that is available in the insurance industry, which is called the mutual. This is where it's a bit of a risk pooling. It's not just a pure company and you buy a policy and it's done. It's you if you have a policy, you are actually also the owner of the company, and policyholders are the owners in that case. This is a better alignment of claims because, of course, like if there is money left over, you are the shareholder, so, or at least a stakeholder, so you get part of that money. And the dividends do go to the members, who is a policyholder. Investments are also unrestricted in this situation because that part works just like the conventional insurance. So how is Takaful different? The Takaful is different because it's similar to the mutual companies. There is risk sharing. The only added thing is that there is Sharia governance, meaning that there is another governing body that is independent and has say in some of the decisions that the company makes, and and that team, is basing its decisions on Islamic legal discipline. So there's more governance, there's additional government. It's not just a board of directors that do this. They have to come up with a rationale for their decisions. In terms of ownerships, again, this is actually similar. You are the participant. The ownerships are actually the operator managers. So these are the people who are running the company, and they don't own the pool of the money. So I'll explain that in another section. Claims incentive. So this is fully aligned because operator fees are fixed. Those people who are running the company, they make a certain amount of money. They do not make more money if they pay fewer claims. They don't have an incentive to deny claims necessarily. And that's good. We can define what that operator fee is in terms of percentages and things like that, but the incentives are quite aligned in terms of claims. So that could be good for customers. Surplus. If you have money left over, not enough claim, hey, great. Well, that money goes back to the participants, in terms of cash, reduction, charity, but that is not money for the operators. Okay, that's just money. And investments, this is where the biggest difference is from the other conventional and insurance companies, is that this company does only invest in halal investments, ethical, no interest, etc. So let's take a look at where does your $100 go. If you are a conventional insurance company's claims and reserve, you got to keep some amount of money just in case the claim comes in. You spend some amount of money operating the company, and then whatever the investment return is from the money that they collected as part of the premium, that just goes to the shareholders. Great. Your share as a policyholder is not anything else. And then mutual companies, same thing, except you get a dividend. So you do get something because you are a policyholder and you are an owner of the company. Takaful, you also get the same. You get the additions, that is left over. And the biggest thing is that the claims and reserve work similarly, and the waqala fee is the operator fee. So these are the people running the company. As long as you keep the expenses are similar, it should be the similar. Halal investments only. So that's the biggest difference. If you're on this website, you can also click on this to see a bigger comparison in another page, but I don't want to. Actually, let's quickly take a look, but I won't want to spend too much time in it. This does show you what the differences are in broken down in much, much more detail. So if you're interested, you can read this. Okay. So then I built also 2 other pages because a lot more, like not everybody knows a lot more about the history of finance, history of insurance, etc. So I built a way for us to explore it together. And let's quickly take a look at one of them, actually. The history of finance. Let's start with that one. So, history of finance, at least history of modern finance, I started it all the way from ancient times, which is, ancient trade. So this was long before Islam. We had the question of how do you generate money. And then ancient philosophers weighed in, religious authorities, lawmakers. So what exactly happened during that time? Around 3000 BCE, in Mesopotamia, first written contracts were done. Clay tablets and things like that. And then almost 1500 years later, Phoenicia, they had the maritime trade networks. And that was important because you needed letters of credit to go from one place to another and still have money or something used as a money. And then around 600 BC, you had temple banking and maritime loans. And then around 300 BC, that's when Romans had their societas partnerships, and that's complex lending came into play around that time. And around 500 CE, we had the caravan trade in Arabia, which was the trust-based commerce. So this is ancient times. So there are things that we know about interest said by people from different eras. So Aristotle said money is barren; it cannot breed more money. Basically, talking about interest. We had this in Aristotle's words. Cato the Elder said lending at interest is akin to murder. Well, okay, so there's some prohibition there. Roman law permitted interest but capped rates, usury rates. Like you can't be like too high. But unfortunately, even in today's world, we see that sometimes the rates are too high, especially credit cards and things like that. And in early church, in Christianity, all interest was usury, and they were sinful. So no, you cannot be dealing with interest. So ancient world understood something profound. Wealth without work felt illegitimate. But no civilization had yet created a comprehensive alternative system. So what does it look like from 7th century on? That's when Islamic commercial law kind of came into place, and it had 5 criteria. So we'll go over them. Profit comes with risk. This was a criteria. Okay, so you can have profit, but it's got to be with some risk. You got to be exposed to some risk. Gain follows responsibility. If you have ownership, that means you have responsibility. You can make money off of that. You have to own it though. If you want to make money on something, you have to own it. So if you want to have people pay rent, you got to own the property. And then la darar wala dirar. It just says no harm. Basically means that contracts must not cause undue harm. A lot of people don't understand contract when they write it. I signed many contracts I didn't fully understand, but it's just too complicated. It's important for people to get into contract where everybody knows what they're getting in for. That seems very normal and easy, and this is what this means. You cannot have harm in a contract. Okay, and we talked a lot about this. No usury, no interest, etc. Money cannot generate money without real activities, but we see that today all the time, and it was always there. It wasn't that it's new today. It's been there for a long time. And prohibition of gharar, which is no excessive uncertainty. So contracts must be clear and transparent. You can't have contracts that are unclear, and it's not clear like how you get paid, how you don't get paid, etc. So it's got to be clear. This is what legal system is about. So mm, with these 5 principles, you basically build the foundations of the Islamic commercial law. And these are some of the instruments. We can go over these at another time. But one thing I wanted to point out quickly is that SUC is the written payment order, which is the origin of the word check. I did not know that. It's interesting. So the word check came from SUC. Okay. Islamic finance, a bound financial gate to real economic exposure. Makes sense. You're going to take some risks. Yes, you get some profit. But you shouldn't be just making money without having any skin in the game. And then what happened in the Islamic Golden Age? That's when at the same time Europe entered its dark ages. Islamic world actually built the most sophisticated commercial network in history. From Spain to China, Islamic commercial law enabled trust-based trade across 3 continents. Wow, that's exciting, right? And then we learn about like what those are, the trade networks, etc. You learn more about the centers of learning, and then the crusade started. So I kind of want to stop in here because it gets very interesting from here on out, and I'm going to make another video on this. But today I want to kind of focus on how the insurance company that we're thinking about building is going to work. So back to first. So I built this page, and if you want to follow the progress, you can enter your email, subscribe, and hopefully we can give you updates on how the progress is going. And if you want to get involved, then you can also sign in. And so here's what happens when you sign in. You get to the internal page, and we have a bunch of things in here. I want to show you what are the things that we have. Let me move this over here. So we actually start with the curriculum. Curriculum is the section where you learn about the insurance. You learn about Islamic insurance, you learn about Islamic finance. So these are the chapters. You learn about Islamic finance foundation, the partnership structures, Islamic financing products, Takaful fundamentals. This is what we're going to build. Takaful operators, how the insurance company is going to operate. We're going to get into advanced financial analysis, accounting standards, US regulatory framework. So there's a lot to learn here. And if you go into this, like for example, Takaful fundamentals, introduction to Takaful, these are the things you're going to learn, and then there's a whole content of stuff you can read and get yourself familiar with what Takaful is. And it's fascinating, and it has good examples. Like for example, person pays $1,000 in premiums over 10 years, never makes a claim, they receive nothing in return. Meanwhile, a person pays 100 premium and immediately suffers a $50,000 loss. The insurer must pay. This uncertainty in the exchange is gharar. But we want to make sure it's not excessive gharar. So a certain amount of uncertainty will always be there, and that's why you have a risk. Okay, so if people are interested, they can go through the curriculum, learn a lot more about Islamic insurance or Islamic finance in general, because some of the earlier foundations are just going to be about foundations. Introduction to Islamic finance, riba, gharar, Sharia governance supervision, partnership structure, musharaka fundamentals, diminishing musharaka, mudaraba, and then mudaraba in Takaful operations. So these, only when you go through it, you'll understand more in detail. Maybe I'll make other videos about how these really work. But there are already some excellent videos online. But as I learn more, I'm happy to share my learning as well. So what exactly are the rest of these things? So I asked Claude to give me kind of a strategy, and it did, in terms of how to start this company. So the key thing was that there is a clear and substantial gap in the US market for Sharia compliant insurance, Takaful. No genuine Takaful operator currently exists. The most viable path involving addressing immediate needs through distribution and specialized services while building towards longer-term career solutions. Well, that's what it says. So how do we do it? Well, we have the people, we have key target states, we know who they are. Actually, it's right here. Geographic distribution, you kind of get a Muslim population. I don't know if the numbers are up to date, but good thing to check on. And the market opportunity is actually quite high. And we talked about the market opportunity a little bit. Target segments, like in terms of who needs insurance. So mosques and Islamic centers, they need it, and these are the kind of the insurance needs that they have. They have property insurance needs, they have general liabilities, they have directors and officers liability, religious counseling liability. I hope we don't need this, but sexual misconduct liability, gotta have it in case. Workers' compensation, of course, commercial auto, and cyber liability. So these are some of the insurance that mosques and Islamic centers might need. And we have Islamic schools, halal businesses, professional services such as medical, legal, accounting, consulting, tech, etc. So the market is quite large, and the gaps also exist because we do not have takaful for any of these things. So that's the target segment. Strategic direction. So we can't get there in one day or very quickly anytime soon. So you have to go there step by step. So probably the first step is learning about what it is and making sure everybody understands it. Insurance itself is very complicated, so learning additionally about Islamic insurance is it's a lot more. It's only when people feel the need to, they might come here and learn about it. But it's imperative that we also make ourselves more knowledgeable about this, so we can benefit from this. So learn. This is gonna be great. And then after that, you can go into a niche underwriting and specialist a service. So this is usually a great way to get started on the journey of becoming a carrier. You start by becoming an MGA first, which is, you don't have to have all the money, but you have to have the expertise in how to write certain types of businesses. It's a great way that a lot of companies get started. We have a lot of MGAs in the US. And then we can have a long-term career play. So that's going to be long-term, and there's things that are just going to work, and then there are things that we're going to find challenges, etc. So first, work on the distribution, then figuring out the investment management, and then specialized services. So there is a strategy to how to get there. The main problem is actually the last one, regulatory landscape. The core challenge lies in the US state-based insurance regulation system, which is designed for conventional insurance models such as stock, mutual, reciprocal, etc. Key takaful structures and principles do not fit neatly within these NAIC models, statutory accounting principles, risk-based capital requirements, or state insurance laws. So this is the biggest hurdle, because the laws in the books currently favor conventional insurance. That's probably because nobody tried to make a takaful insurance, but I want to be clear, the challenges exist. There's a lot of things that we have to have, and many of these are not going to be possible immediately. So we have to work towards it. Good news is that we have international comparison. There are other countries that did things like this. We have Malaysia doing a lot of activities. We have GCC countries that are doing it. Even United Kingdom has some structures in place. So some of those can be borrowed and brought into US. And then potential regulatory pathways, there's a way to get there. But this is not going to happen in a quick format. We have to be very deliberate and careful and make sure that people understand what this is going to do. But it's going to be beneficial for everybody. So I also asked Claude to give me kind of the phases and tasks. So there are a lot of tasks. It gave me kind of a list, and every time we do something, we can update it so it shows that we've gotten it done. There's things around research and education. There's things around Network and advisory building, regulatory compliance is going to be heavy. Product design, which is the insurance product design. Technology infrastructure. Good thing is that today it's going to be a lot easier to get this off the ground, and that's a good thing. Before, people may have had one of these, but not all of these. But today, this one can be made very easy. Funding and capitalization. Again, if the opportunity exists, the funding will be possible. So not too worried about it, but nevertheless, there's definitely worry that we don't have enough money to get started with something like this. And then there are a lot of activities around pre-launch and what to do about it, etc. There's also things like reinsurance you have to think about, marketing strategy, recruiting, soft launch, public launch, etc. So these are some of the phases and activities. It also provided a timeline, okay, when to do some of these things. I asked it to be a little bit more aggressive, so it gave me a 24-month Gantt chart. Not sure that's actually feasible, but nevertheless, let's see. There are a lot of activities. We'll tackle them one by one and hopefully find out how far we can go. Budget was interesting. It kind of gave like a budget ranges. Now I don't know if any of these budgets actually real, but these are the estimates. And it might be real. And honestly, if we could get an entire career started using this level of budget, it would be excellent. But I have a fear that will definitely cost more. But great, we have something to get started with. At least we know the categories where the budget might need to be allocated. In terms of milestones, as we complete each of these things, we can update the milestones, and currently 10 are pending. And nothing missed, nothing achieved, nothing at risk. Okay, but as we continue on our journey, we'll be updating these. In terms of history, it kind of showed you the modern finance history. Actually, I originally built it inside. That means you have to sign in to see it, but now I made it outside, so you don't have to log in. Okay. What happened? Oh. Okay. Let's go on to this one. This is the other one, the conventional versus mutual Takaful. Explain this also. I also have a section on resource library where the documents and things like that to get further into understanding of technical things are available here. The Takaful guides, the accounting standards, Islamic financial fundamentals, regulatory, legal, etc. A lot of important documents are saved here. So this is the resource library, and as we learn more things, we are going to also use research notes. Okay, we learn something interesting about how this works, and here and there we're going to capture that. And then there's a section on contacts. We don't have any contacts right now. Only a few people who I've told about this project, so apparently it should be empty. But as we find more and more people interested in this, we're going to start creating the contact directory, so we know the people that are going to be helping us on our journey. Okay, now let's talk about how I built this. First of all, I did it over the course of 3 days, and that's only because I've been thinking about it for some time, that hey, this would be great if I take on a project that's way larger than me and see how far I can take it. And because of AI, it's made a lot easier today. So I'll tell you how I did it. I use primarily Claude code. I use it on my terminal. I learned how to do that. And what I did was basically I started with the basic prompting. And fortunately, Claude code can actually do a lot. Like I don't remember the exact prompts that I used, but basically I gave it general instructions like, hey, if I wanted to build an Islamic insurance company, how would I do this? and then asked it to build me a website with a plan, step-by-step plan, and then it started. And then as I saw what it did, I gave instructions, basically prompts, to fix some things and add some new things, remove some things. So that's what made it where it is today. This would typically take a lot longer in another time with fewer technology than we have today. But now that we have starting ground, we can actually just execute and see where the issues are. Knowledge is a lot more accessible. In fact, the curriculum that you saw, there are other curriculums that people offer, and they're available online. This one was built by Claude. I haven't read through everything. I will, but I will find out also which it got right, which it didn't. But as the models get better, the knowledge is not the issue. Then the main challenge becomes, okay, can you execute? Do you know what it is? Yes, because I learned it. And you go in the real world and find out if that's actually accurate. And let's say we can execute on all of these phases and tasks, essentially we're there. Right? just follow. And that's the interesting thing about our world today. So how did I do it? I used mostly Claude Code. I do have some other tools that I use. For example, I host it on GitHub so that as I make changes, if I ever mess up, I can always go back to a previous version. I use Vercel to host the front end and Railway to host the back end. So all of these information, they're actually saved in database for which I use Supabase. And you saw also the login that you can use Google login to log into the tool is through Supabase. So they have authentication I only allowed Google and Azure right now. I don't know if people need anything more, but so far this should be fine. Okay, so excited about this journey. Let me go through the learning and find out what else do I need to know, what did I not know and was missing, and then make progress in terms of additional modules, figure out what the actual challenges are, etc. So I'll keep you guys posted on the journey, and inshallah we can make this happen.